The Federal Reserve raising its benchmark interest rate by 0.5 percentage point to the highest level since December 2007. That brings the Fed funds rate up to a range of 4.25% to 4.5%. Officials raised their estimates for the peak of their short-term rate by 50 basis points to 5.1%. That's about 25 basis points higher than what the market was expecting. Fed Chair Powell saying that the committee is not at a sufficiently restrictive policy stance yet, and that it's possible officials could raise estimates for rates even higher if inflation continues.
I can't tell you confidently that we won't move up our estimate of the peak rate again at the next SEP. I don't know what we'll do. It will depend on future data.
Powell said he wouldn't see the Fed considering cutting rates unless the central bank is confident inflation is coming down. The Fed lowered its growth forecast. It now expects just 0.5% of growth next year and about 1.6% in 2024. December's moves cap an historic year for the Fed. It saw the central bank raise rates at the fastest pace since the 1980s to tame stubborn inflation that reached a 4-decade high. After holding rates at near zero since the beginning of the pandemic, the Fed moved in March to raise rates, ultimately raising rates by 4.25 percentage points this year, including an unprecedented 4 75 basis point hikes in a row.